Okay, hi everyone. Can hear me? Yes, and can see the screen as well. Yeah. Okay. Can you all just maybe take some time, maybe 2 to 3 minutes? If there is any friend on the group and is kind of missing, just drop them a text or maybe give them a reminder. Right. So we'll wait for like 2 minutes and we'll start. All right. Okay. So about what are we going to do today? Right. Today we have to focus from 2012 onwards. Right. Last class we finished the MCQs and we started the 2011 A-level paper. So today what we have to focus is from the 2012 A-level paper, all the national income accounting questions. Did you all do the questions? Yes, no? Did the national income accounting ones? Yes. Okay, only two. Okay. Okay, so most of y'all have done. I've got around 20 to 25 yeses. Okay, so apart from that, I think the others also, guys, right? So make sure you do the questions and come so that you will benefit better from this, because rather than, just listening to me, it's better if you do and come and then, kind of mark your answers and then kind of, let's say, if there is any doubts, you can clear it off. Okay, so but even if you all have not done, that's fine, right? Just because you have not done, don't stay at home without coming for the class. Come, because you still can learn something, right? But ideally, do the questions and come. Then we can do, we can go kind of much faster and do a lot of things. I'm kind of sick today, not feeling very, very well, but didn't want to cancel the class. But we'll do this. Any questions before we start? I'm not going to wait if anyone who wanted would have come. Any questions before we start? Anything? Yes, no? Fine. Okay, so we'll start then, right? The others can come in the middle. No issue. Okay, so 2011 A levels, sorry, 2012 A levels, question number 4, right? Remember, now, like I said you all before, in the previous syllabus, right, there were two questions. One question, question number 4 was from national income accounting, 5 was from macroeconomic equilibrium, right? But now in your syllabus, 2019 onwards, national income and macroeconomic equilibrium both are combined, and you only get one question from both of that, right? So in the old papers, you will see question 4 national income accounting, question 5 macro, but now you will only have question 5 both from national income accounting and macroeconomic equilibrium. Actually, it's not a hard unit, but there is this misconception that students think that it is hard and stuff. Yes, maybe scoring all 20 marks can be a little bit challenging, but still, come on, to get an A you only need 15, right? If you can get 15 out of 20 or even more than that, you can definitely get your A, right? So it's the same question that kind of keeps on repeating and repeating. If you have proper practice and that if you have done all these questions, trust me, it is also an easy question to answer. Okay, so 2012 A levels, will go with question number 1, right? So question number 1 says, gets a circular flow of goods, services and resources through households and firms. Draw money flows also in the same diagram. Indicate the direction of each flow. So circular flow of income, this is a very, very basic area in your syllabus, right? So this is the basic circular flow of income. You can draw this in different ways as long as you have your arrows properly. So I'll just give you a brief, right? If you look at the circular flow of income here, first of all, what happens, right? Households, remember, you can put households this side, firms on that side, right? As long as your arrows are correct, no problem at all. Yeah. So first of all, households provide factors of production. This black arrow here. In return for their factors of production, right? They get wages, right? They get rent, they get interest, and they also can get profit. So here they've said dividends, but you can say profit. Okay. So then what happens? Households who get this in return of their factors of production, when they get wages, rent, and stuff like that, what do they do with that money? They spend that money on goods and services. Now they need to buy goods and services. So now these people spend it on goods and services. Again, they give that money back to the firms to buy goods and services. So consumer expenditure. In return, they get the goods and services. Now here, they've asked you to highlight the money flows and the real flows. Can you all tell me which of these are the money flows, which of these are the real flows? Let's say I'll label this one, two, three, right? Money flows and real flows. Okay, which one is the money flow? Which numbers? Where is money being flown? 1, 2, 3, or 4? Money? Yes, money is being flown in 2 and 3, right? That is where money is being flown. So here, if you look at it, right? If you look at the, okay, if you look at this, right? So now you have to label this in your diagram, right? So wages, interest, and dividends, that is money that is coming into households, right? And also in return, households are spending some money to buy goods and services. That is also a money flow. Now those two, right, are money flows, while these factors of production, now them providing factors of production is not money. This is a real factor of production that they are providing. So it's a real flow, right? And also these goods and services that these firms, households are getting, even that is a real flow, right? So remember that the goods and services and the factors of production are real flows. The consumer expenditure and the payment for the factors of production, right? The wages, rent, dividends, those are monetary flows. So in your question, in case they ask you to highlight, you will have to highlight that. Okay. Right. Then question number 2. Give me a second, my board is stuck. Okay. So if you look at question number 2, they're asking, explain why an economy's total output in essence is also its total income. Now, what is the meaning behind this? Do you all agree with that? That the total output is also equal to the total income? Yes or no? What do you all think? Yeah. So how does this work, guys? It's a very simple concept, right? So I'll explain to you how. Now, why is the total output and the total income equal? Now, for example, let's assume, right, that this country has made, right, output, or let's say goods and services worth, let's say, 1,000 rupees, right? They were made it worth of 1,000 rupees. Let's assume. Now, to make this goods and services worth 1,000 rupees, right? Now, let's say this is the final price that they are selling this good to. They are selling this good for 1,000 rupees. So, inside, in order to make this good, right, there would have been some sort of rent. There would have been some sort of wages. There would have been some sort of interest that they paid, and also a bit of profit that was there. So if you ideally look at it, right, inside this 1,000, now to make, let's say this 1,000 is a t-shirt, right? To make this t-shirt worth 1,000 rupees, that firm would have used some land, right? So in return for the land, they should have paid rent. Let's say they paid rent of 200. To make this t-shirt worth of 1,000 rupees, let's assume they're only making one t-shirt the entire country, one is 1,000. So to make that t-shirt of 1,000, they would have used some labor also, right? They would have used labor also. So let's say they would have used some people. They paid, let's say, wages of 300 rupees. Again, they would have used some capital, right? They would have used some machines. So for those machines also, they should make some sort of a payment. Let's say they paid 400 rupees there, right? And also, right, for this entrepreneur who is doing this t-shirt production, he also gets a return, right? This entrepreneur also gets a return. So for his entrepreneurship effort, he will get, let's say, a profit. So let's say there is a profit of 100. So actually, if you look at it, right, according to the output approach also, the value is 1,000. And if you add all the incomes, rent, sorry, this is not, sorry, not labor, you can make this wages, right? Rent, wages, interest, and profit, right? So when you look at this, right, the rent, wages, interest, and profit, even those also add up to 1,000. So your answer has to be, remember, now this is a 2-mark question, right? They're asking, explain why an economy's total output in essence is also its total income. So you need to say, right, this total income and total output, right, is the same. In the same process, we are looking at two different dimensions. We are looking at it in two different ways. If you are looking at output, we are looking at what is the value of the final product. When you are looking at, let's say, income, we are looking at, okay, to make that final product, what were the expenses, kind of, right? So it's two different angles that you're looking at the same thing. So at the end of the day, right, the what the value that you get from the output approach and the value that you get from the income approach ideally has to be equal. Even the value that you get from the expenditure approach is equal at the end of the day. So for this question, that is the story that you have to explain, right? Why an economy's total output is also its total income. You need to say that total output and total income, right, is two dimensions of the same process, kind of, right? So when a product is being created, let's say, for example, you can give an example. You can say, for example, let's say, if an output worth 1,000 rupees is being created, within that 1,000 rupees, right, the firm would have incurred some sort of rent, wages, interest, and profit. So the total of these rent, wages, interest, and profit will also be equal to 1,000. So that way you can kind of prove that these two are the same thing. And also remember, it's a 2-mark question. So you don't have to write pages and pages, right? One small paragraph should ideally do. Understood that part? Yes, no? Are we okay there? Yeah? Okay. So then we'll go into question number 3. Now, this question is not really relevant. Now, if you look at the answer for this question, I'm guessing, right? In the past paper book, the answer will kind of be wrong, because you know why? The question is saying, why are some productive activities not measured and thus not included in GDP? Now, for example, earlier, right, I said national income accounting, the way they calculate and stuff changed, right, from the year 2016, kind of. There were changes made to this. So after these changes have been made only, now, for example, now in national income accounting, illegal activities are included, right? They are productive activities. As long as you can find data, you will include illegal activity. Then you will include, let's say, goods produced by households for themselves, right? So let's say you are growing some vegetables in your garden, right? The value of that can be included in GDP. So things like that currently are included. But earlier, right, now this is a 2012 paper, earlier, right, when they calculate national income accounting, those kind of productive activities, goods that were made for the household, right, the black market, right, black market, let's say the illegal economic activities, even though they were productive, they were not included. So if you look at, I don't know if you all went through the answer, right? So they are saying, why are some productive activities not measured and thus not included in GDP? Is it a serious problem? Now, currently, can you all tell me, can you all give me examples, right? Now, according to the new way of national income accounting calculations, what kind of productive activities are not included in GDP now? Currently, it's productive but not included in GDP. Examples. What kind of things do we have now? Now you can't take illegal activities, you can't take goods made by households for themselves. Tourism, okay. Ownership of buildings is actually there, right? Transfers, okay. Productive economic activities, leisure, entertainment, resale, okay. Yes, so I'll make it very simple. Right now, I've got a few answers. Good to see you all answering. But when we say productive economic activities, right? When we are looking at productive economic activities, that means there has to be some sort of, contribution, some sort of production kind of thing happening. Now, for example, now goods for resale, there is no productive activity, right? And then there was an answer on leisure and entertainment. Now, leisure and entertainment is actually included in GDP. So under the expenditure approach, right, you can capture that. Now, for example, under consumption expenditure, right, what a consumption expenditure is the amount that households spend, right? So those kind of things, right, they might be spending for leisure and entertainment. That might be captured under the expenditure approach to some extent, right? But mainly, right, the good answer here that I've got is unpaid household work. Remember when to whoever I taught this unit to, right? I said that, let's say, the services, now even I think last class I explained that, right? The services that your mother might do, right? Your mother might look after your parents, right? Your, okay, maybe grandparents, right? Maybe your mother cooks for your family, right? Now, those kind of services, right? Services by households for their own selves. Now, that is a productive activity, right? Because if someone else comes and looks after, you would have paid that person money. Let's say you hired a servant, right? And that person comes and looks after your grandparents, you have to pay. That person comes and, let's say, washes your clothes or cooks food for you, you have to pay. But when your mother does that, so yes, it is a productive activity. But since you can't properly estimate a value for it, since it's very hard to collect data for things like that, right? You don't include it in GDP. But goods produced by households for themselves is included. Now, let's say your mother grows vegetables in the garden and you all use it for, let's say, cooking lunch, that will be included in GDP, right? To the extent which it is included is debatable, but ideally it will be included, right? But if your mother, provides a service, that will not really be there. So you can say, what are the productive activities? So things like, you can give examples like, what? Okay, so unpaid, right? Unpaid household work, right? That is what I explained. What else? Household work. Mm, interest payment by the government is not really a productive activity, kind of, right? Interest payment by the government is simply a transfer, because interest payment, now, why is the government, now when you're taking GDP, right? Now this is a good question. It was there in a future paper also. I'll explain that part, right? Now, when you take interest payments from the government, right? Interest payments from the government and things like that, right? Now they have taken, let's say, a loan 5 6 years ago, right? They've taken it 5 6 years ago, or let's say 20 years ago, and now even this year they are paying, let's say, interest. So does that belong to this year, or does that even make any contribution for this year's GDP? Not really, guys. So kind of interest payments by the government, right? We don't really take, right, under the GDP. It's not really considered as GDP, because we consider that as a transfer payment. That is just a payment that is just going in without we are getting anything. That is what transfer payments are, right? Like a one-way thing, right? We are not getting anything in return. We are just paying now. So remember, interest payments by the government will not really be included in GDP. But to calculate personal income, you might take it into consideration. But to GDP, no, right? So then you can, what else? Do you all think this, the natural resources growth, will that come or not? Second-hand goods, not really. The growth of natural resources. Okay, so also you can talk about this, guys. You can talk about now productive activities not measured. You can also talk about the hidden economic activities, right? The hidden economic activities. Even this, right? For example, right, it might be included, but for some reason, right, you are not able to get proper information. Now, for example, let's say the three-wheel drivers, right, the amount of money that these three-wheel drivers are making, okay, they're not reporting it anywhere. So those kind of things can also be not there. Okay, so give me a second, I'll share you my tut on national income account. I think it's there in that. Okay, right. National income accounting. Give me a second. Okay, so if you look at this, that was one place. Now, here, productive activity is not included in GDP. So these are the kind of things that you have to kind of include, right? So one is unpaid household work. Then you can also talk about freely obtained natural resources, right? Productive activities not included. Then natural resources grown without the intervention of man. So there is some production happening, right? For example, these trees growing, there is some production thing happening there, right? And also changes in value of resources. So those kind of things does not come, those are, now see the question, if you look at the question they're asking, why are some productive activities not in GDP? Now, most of you all gave me answers for these. You all told about, for example, interest payment, that is transfer payments. You all told me about, let's say, buying shares. That is financial papers here, right? You all told me about second-hand things. So those are non-productive transactions. Now, the question is not that. Question, they are not asking what are the things excluded from GDP. In the question, they're asking what are the productive activities not included in GDP. So these are the stuff, right? So usually now, why are they not included? The main reason why are they not included is because you can't obtain data relating to this. Now, how can you obtain what are the, freely obtained natural resources? Can you put a value to this? Can you put a value of, forests have grown by this much, so we need to take, let's say, 10,000 into GDP? You can't really do that, right? So that is why you don't include those in GDP. So if you want, you can get a screenshot. This is ideally, these are the things that has to come in your answer, not this, because these are anyway non-productive. Okay. Then so then is this a serious problem in estimating GDP? Yes, guys. Why is it a problem? Because when these kind of activities, oh shit, you already see the note. Sorry. Okay, here, in the note, right? All this while I was explaining without a note. Okay, so here, right now in my theory note, these are the productive activities not included. So unpaid household work, freely obtained natural resource grown without intervention of man, right? These kind of things are productive activities not included in GDP. Now, you all gave me examples for, let's say, interest payment, that's a transfer payment. Pensions is a transfer payment, right? Transaction into financial papers is shares, anything, right? Government things, right? Relating to second-hand products, right? Again, these also are non-productive transactions. The question is, what are the productive transactions not in GDP? So these are the things you have to include, right? Not these. They are not asking you what are the non-productive not included. They're asking what are the productive activities not included. Now, earlier, if you look at your answer, right, in your A-level paper, it will also say goods produced by households, black market things, right? That was earlier, right? Earlier, when we were calculating national income accounting, you didn't include those. But now, actually, even illegal things, right, are included in GDP. So as long as you can, even the non-observed economy, the illegal stuff and all of this, right? As long as you can get information, you will include it in GDP. Okay, so remember these kind of things are the productive activities not in GDP. Okay, why is it not included? Because it's very hard to get data related to it. It's very hard to get numbers. Okay, so those are things that you can do. So I'll just remove this. You can get a screen. Hope you all got a screenshot or something of these. These are things that you should kind of include. Okay, the first set. Are we okay, Shep? Yes, no, yeah, okay. So then, okay, question number 4. Which of the following are included in this year's GDP, right? Explain your answer in each case. This is an interesting story. First one, interest received on corporate bonds. Yes or no? Corporate bonds, interest received. Guys, it is included, right? Remember, purchasing a corporate bond is not included. Remember, I said even when you purchase a share, that is not included. But if you get a return from it, right? Let's say you get a dividend from that share, that will be included. Let's say you are purchasing a corporate bond, that when you purchase the corporate bond, it's simply money going from your bank account to the business's bank account. There is no productive activity. But when you're getting a return, right? When you're getting interest out of it, that is the return for your capital, right? That will be included. So remember that. So when you say interest on corporate bonds, you should say yes, because this is the return that you're getting for investing in this bond. But you simply buying that corporate bond, no. You're getting a return from it, yes. Same thing with shares. You buying a share, not included. You're getting a dividend from the share, included. Okay, make sure you do that. Okay, pension payments received from the retired public workers, pension payments, is it included or not included? Guys, it's not included, right? It's excluded. Why? The reason is this is simply a transfer payment. There is no productive economic activity taking place, right? They're just getting money for the sake of getting money now. They're not contributing anything. Okay. So therefore, not there. It's simply a transfer payment. That is the reason. And then purchase of an insurance policy. Do you think this is included or not included? What do you think? Insurance? Yes, remember, right? Insurance is a service. Now, insurance is not a share, right? Shares, bonds, those are different. Insurance are services, guys. So, like you're paying for your transportation expenses, or you're paying for, let's say, your communication, let's say, your electricity bill. Same way, your insurance. So, when you purchase an insurance policy, right, the insurance company will give you some service in return, right? So, therefore, this purchase of insurance is included because this is a payment that you make for a service. Okay, included. Then this easy one. Can we have answers of everyone? Purchase of 100 shares of a finance company included or no? When you purchase 100 shares, guys, remember, right? Purchasing shares is not included. Why is it not included? It's not included because it's simply a transfer payment. Money going from one account to another account. No real productive activity taking place. So it's not included. No. Okay. Then this rent received on an apartment. Rent received. Exactly. Now rent received, this is for a service, right? This is like a factor income. Just like you getting interest on a corporate bond, right? You're getting rent on your apartment means, yes, that's a income for you. You will include it, right? So the first A, C, and E are included. This and this is not included. Why we include corporate bonds? Corporate bonds, I remember I told you. Now, when you purchase a corporate bond, you don't include. But if you're getting a return from that corporate bond, you're including, right? Simply purchasing a corporate bond. Now, when they say purchase of a corporate bond, it's excluded from GDP. But if you're getting a return from it, now for bonds, you get annual interest. Now that interest will be included in GDP. Now here in the part D, right, purchase of 100 shares, no. But if this part D said, uh, let's say a dividend paid for the shares that were purchased, then yes. So simply the financial transaction, no, but a return you're getting out of it is included. Okay, get that clear. Fine. These 5 questions. Okay, so part B, right? Part B is talking about pension payments. Now, what is GDP? When you look at GDP, they're saying the value of final goods and services produced during a year, right? Now, when you look at pension payments, there is no productive activity taking place, right? These people are retired and now they're just getting money simply because they worked in the government. They're simply getting money. They are not contributing to the production process. There is no contribution. So, part B here, we consider this as a transfer payment, right? A mere transfer payment where just money is kind of coming. So therefore, it's not included in GDP. Obtaining a loan also, loan also maybe no, but the interest for that, yes. How do we explain this in each case? So you don't have to explain in paragraphs, guys, like I just said, right? Now, interest on corporate bond, you say yes, included. Why is it included? You can say this is the return for your capital invested. That's all, right? Pension payments, not included. Why is it not included? Because this is simply a transfer payment. That is all you have to write. You don't have to write paragraphs and paragraphs, right? Just one line like what I said. If you write, it's enough. Except, can we move on? Okay. So there is part 5 here, but remember part 5 is a calculation that is out of syllabus, right? So I didn't want to do that and confuse you all, right? That is on, there is corporate profits and wages and interest income and stuff like that, right? You don't have to really give that. There is paragraphs on this, really? Past paper on this part. I doubt. So remember, because this is 5 marks, no, right? Just practically think. 5 marks, you're getting 1 mark for each of this, right? 1 mark for each of this. So you will get half mark for saying yes or no, and you will only get half mark for your explanation. So you don't need to write a paragraph for your half mark, guys. So be smart there. Right? You might be knowing a lot, right? But that does not mean you have to write everything. So that's simply, if you break down the marks, definitely half a mark for yes or no, whether it's included or excluded, half a mark for your explanation. So your explanation can simply be in one line, right? So don't drag it too much also. Now, if it was, let's say, only interest received on corporate bonds, is it included, explain? Then yes, entire 5 marks for that. No, then you have to kind of explain. Okay. That part 5 is out of syllabus, so cut that question off. You don't have to do that. Okay. We'll move on to 2013. So insurance policy is included because insurance policy is a service, right? Now, shares and stuff are not services, no, just like communication, just like, let's say, electricity, insurance is a service. That is why it's included. Okay, right. So then in the 2013 paper, they are asking, what do you mean by changes in inventory? Why are changes in inventory included as a part of investment spending? So what is changes of inventory? Sir, included in the sense which we receive. Included in the sense where? You're talking about this included or the previous one? Fifth question, 2012, guys. I just said that is out of syllabus. Don't do. Financial logistics. Financial logistics in the sense. Okay. Is when I don't know. Let's pay close attention to every word I say because I'm sure that I explain whatever that you are talking about. Which one? Can you say A, B, C, D, O, E? No. Yeah, so included means, is it included in GDP or not? When you're calculating GDP, are we including it or are we not including? So are these transactions included when calculating GDP or not included? That is what included there means, right? Not whether people are receiving money or not receiving money. That is not the base. GDP, all productive economic activities are included in GDP. Apart from what we studied before, unpaid household income, household work, and those stuff. Right? So just go and check whoever who taught you this thing, right? Whoever who taught you national income accounting would have told you something called a production boundary, right? So a production boundary defines what is included, what is not included. So just check revision class students, the recording is there, right? Whenever we did it. So just go and check something. I taught you all something called revision production boundary, right? So I said the production boundary will define what is included and what is not included. Remember, we went through this like a lot of times. You all had like 100 questions included, right? So just go and check in case you all have forgotten. We did it in December, right? Recording will be there in a Google Classroom, I think. Okay. Okay, so 2013, right? What do you mean by changes in inventory and why are changes in inventory included in a part of investment spending? Now, if you look at the expenditure approach, remember you have C plus I plus G plus NX, right? Under I, that is your gross investment, you have gross fixed capital formation, you have changes in inventory, right? You have things like that. So why is this changes and what is this changes and in inventory and why is it included? What do you all think? What is this? Changes in inventory means? Yes. Now, in simple terms, right? Changes in inventory means, right? The stock, right? The stock of goods at the beginning of the year and at the end of the year. Now, for example, if you look at when you're calculating GDP, now why is it included is this, right? Because when you're calculating GDP, right, now when you're taking the output approach, right? So let's say you're taking the output approach. Output approach means the amount of goods that has been produced. So now there can be, now let's say you have produced, let's say 1,000 t-shirts, right? 1,000 t-shirts you have produced during a year. But let's say you have only, you were only able to, right? Let's say sell 800 t-shirts, right? So the expenditure, right? In the expenditure approach, when you're calculating GDP, the value will only be for 800 t-shirts. Can you see that there is a problem here? You have now GDP is the total value of final goods and services produced during a year. Okay. So according to the output approach, when you're calculating, you're saying, okay, we produce 1,000 t-shirts. But according to the expenditure approach, when we are going to calculate the value of GDP, we are only looking at the amount of value spent, no, amount of money spent. But the amount of money spent here, let's say only 800 t-shirts were sold. 200 t-shirts were unsold during the year. Not everything produced during the year gets sold during the year, no guys, right? So there is some inventory. So ideally, now the other 200 t-shirts unsold should also be a part of GDP because there was a value addition there because those goods were produced during that given year, right? So that is why you include changes in inventory. So changes in inventory means that remaining stock, right? The difference between the opening and the closing inventory. So that has to be included. Why has that has to be included? Because those goods were also, now, for example, in the changes in inventory only, you will have the other 200 t-shirts, right? In changes in inventory, the value of the other 200 t-shirts, right? The other 200 t-shirts should also be included. Why should it be included? Because that 200 t-shirts was also produced during that year, right? There was a value addition. You used resources during that year. So at the end of the day, output approach and expenditure approach should match. Output approach can't say 1,000 and expenditure approach can't say 800. So that is why in the expenditure approach, under investment, we add this 200 t-shirts as change in inventory. Why? Because it has been produced during that year, but still not sold. That is a different story. But still, it has been produced. No? There has been a value addition. Therefore, you definitely do include this in GDP. Is that part fine? So you look into, guys, now if you all want to, I'm not going to dictate definitions and stuff like that. You all can get from the whatever that you are studying or whatever, even behind your past paper book. So I just gave you the explanation there. Is that part okay? Or do we have questions? Yes, no. But remember, the 2013 paper in general is kind of a hard paper, right? So if you can do the 2013 paper properly, right, that means you are at a good level. Shape, yes, no. Questions lost. Can we move on to the second? Okay, if I'm explaining using another example, now in one of these past paper books, I can't remember which year, they talked about some books, right? Some books which were produced but remain unsold. Now, for example, right, simply think that you produced, right? I'll just give it here. Okay, okay, so let's say, simply think that there were 500 books that were published, right? 500 books were published during the year. So let's say one book's price is, let's say price is 100 rupees. So according to the output approach, right, they will say that 500 into 100, that is, right, 50,000 worth of output, 50,000 worth of books were there, should be included in GDP. But let's say from these 500 books published, not all the books get sold, no, guys, right? All the books don't get sold, right? So only, let's say somewhere around, let's say just 300 books were sold, right? 300 books were sold. So under the expenditure approach, then expenditure approach will say, okay, 300 books were sold. That means 300 into one book is 100. Only 30,000 should be included in GDP. Now there is a problem. Output approach is saying 50,000 because we produced 500 books. Expenditure approach is saying no. So only 300 books was were sold, so only there was expense only for 300 books, so only 30,000. Now that can't happen, right? So there has to be an adjustment done to this. So actually the output approach is correct, because what is GDP? GDP is the value of final goods and services produced during the year. So output approach 50,000 is showing the correct value, but the expenditure approach is showing not the produced amount, it's just showing the sold amount. So there is 200 left, right? 200 books which were unsold. So those 200 books, price is 100, right? That 20,000, right? That 20,000 should be included under changes in inventory, right? So why are changes in inventory included? Because of this. Why is it included in a part of investment spending? Because firms have spent money. Whoever who published this book, they have spent money to, make this book. There was a value addition by them. But even though it was not sold, right? But still they produced it. No? GDP does not take it. GDP, we are not looking at what is the value sold and stuff, right? In GDP, we are taking into consideration what are the goods produced during that year, final goods. So that is why that 20,000 is taken into what changes in inventory under investment. Got it? No? Yeah. Okay. Then, okay. So the second one. Now, this one I explained before as well. Why are interest payments by the government considered as personal income, as a part of personal income, but not a part of national income? That means, why is it not a part of the GDP, national income, just considered a GDP? Why don't we take it into consideration when calculating GDP, but why are we taking it into consideration when calculating personal income? So the answer is very simple, guys, right? So remember, okay, first I'll explain this part. Why is this not taken, not a part of national income or not a part of GDP? Is because this is simply a transfer payment, right? Like I said before, this government debt could have been taken 2 3 years ago, or even let's say 20 30 years ago. Now even currently the government, for the debt that they are paying interest for loans that they took around 50 60 years ago, they're still paying the loan. So that does not mean there is any productive activity taking place, right? So it's simply a mere transfer. So therefore, it does not include. So you should say GDP considers only, right, the spending on goods and services during that year. But this government payment, government interest payment is simply a transfer. So therefore, it will not be included in national income. Then why is it included in this? Why is it included in personal income? So if you look at personal income, remember, again, whoever who taught you national income, right, would have taught you this, right, at the end. Okay, so if you look at how do you go from national income to personal income, right, just go and check. Whoever who taught you, there would have been a part like this. Give me a second. Something like this, right? How do you go? How do you calculate household income? In other words, personal income. From national income, how do you go to household income? So from national income, when you're going to household income, right? Now in national income, you don't include government interest payment. But if you look at households, right? Maybe a household is the person, right? Maybe households were the ones who, let's say, purchased these government bonds. Let's say they were the people who gave this loan 20, 30 years ago. So even though that's not a part of national income, since it's a transfer, these people are getting some money, no? It households are getting that money. So that is why it's included in household income. So if you look at it, right, if you know this conversion, how do you go from household income to uh how do you go from gross national income to household income? You need to add these parts. You need to add the household transfer receipts. For example, pensions, social protection benefits, and can you see government interest payment? You're taking that into the consideration when you calculate household income. Why are you taking it into consideration? Because this is a transfer received to households. It's not included in GDP, not included in GDP simply because of a transfer, no production activity. But at the end of the day, households are getting some money now because of this. So therefore, it's included in household income. It's included in household income because they kind of get it. They can use this for their consumption purposes, right? So that has to be your explanation there. right? Why is interest payment considered as part of personal income? Because households are receiving it, right? Because they would have been the people who gave that loan maybe a few years back. So in return for their loan, they are getting that thing, right? But it's not a part of national income because simply it's a transfer payment because that loan happened, let's say, a few years ago, right? It's not a part of this year's GDP. You can't consider part of this year's GDP. It's not a productive activity, simply a transfer payment. That is what you have to write. Yes or no? Oh, lost. Okay, tute slide again. Give me a second. Okay, fine. Okay, I'll repeat. Okay, so in very simple terms, guys, I'll give you guys, and also please, right? I'll tell you this, right? Please go through the unit and do the questions and come, because if you're doing it for the very first time with me, then there can be a problem, right? And if this is the first time you're listening to transfer payments, household income, then also there is a problem, right? So this is not a theory class. This is not a revision class, right? We are simply recalling, doing past papers to improve on your writing and see what you can do, with the intention that you have some sort of knowledge. And by now, given that it is March and your exam is just few months away, it's not wrong for me to expect you to have a knowledge on these, right? You would have done this in school, you would have done this in class, right? Wherever that you go to, you should have ideally done. So I'm repeating once again, why are interest payments part of the government considered personal income but not national income? Now this national income part I explained even in a previous question. Why is not it part of a national income? It's not a part of national income because simply it's a transfer payment, right? It's you're simply paying a amount, right, for a loan that you took around maybe 5-10 years ago. So there is no productive activity taking place. It's simply a transfer payment. That is why it's not a part of national income. Why is it a part of personal income? It's a part of personal income because households receive this, right? These interest payments, maybe it was the households who gave this loan some years ago, right? So maybe, for example, let's say households were the ones who purchased, let's say, government treasury bills or government treasury bonds, right? So because households have purchased this some times ago, right? Now they're getting that return. So yes, it is a part of personal income, but not a part of national income. Okay, so that is that. Hoping that's fine, right? And then we have question number 3. Question number 3, guys, I'm saying a country that spends more than its total national income must have a deficit in the trade balance. Now, what does this mean? More than its total national income. Now, remember, here when they're saying national income, they're talking about the GDP, right? So when you look at this, can you give me the equation GDP expenditure approach? C plus I plus G plus net export. Okay, now I'll show you the connection here. This GDP is the national income, right? Can you give me this C plus I plus G? What do we call this? C plus I plus G together, there is a name that we call here. What is that? GDE. What is GDE? GDE stands for gross domestic expenditure. So gross domestic expenditure. This part C plus I plus G here is the gross domestic expenditure. Okay. So then now look at this, right? Now in this question they are asking, now read the question properly. A country that spends more than its national income. So national income is GDP. Spending is this C plus I plus G. They're saying must have a deficit in the trade balance. Now, for example, right, let's say your GDP is 1,000, right? Your GDP is 1,000, okay? And your C plus I plus G, right? So let's say it's 500, 500 and 200, right? So if this is the case, can you tell me how much should net exports be? C is 500, I is 500, G is 200. Net exports should be how much? When will you get 1,000 there? Guys, net exports has to be minus 200. So only then your national income will match. So now can you look at this question? They are saying if this, right, if this expenditure is greater than the national income. Now can you see 500, 500, 200 is 1,200. So the gross domestic expenditure or the expenditure in the country is greater than the national income. So when the expenditure is greater than the national income, what is happening? Our trade balance is a deficit. Our net exports are a deficit. So that is what you're trying to prove here. So simply they're asking a country that spends more than its national income must have a deficit in its trade balance. So you need to say national income is the addition of C plus I plus G plus NX, right? Then you can say the amount a country spends is equal to C plus I plus G. So if you want, you can put in an example like I put, and you can say, so if this C plus I plus G, right, if this C plus I plus G is greater than this amount, is greater than this 1,000, then definitely this net export value has to be a negative. So that is the explanation behind that question. It's a simple one. You don't have to write pages and pages for these guys. Remember, for questions like this, if you write to the point, right? If you write to the point and you have your exact points enough, you don't have to write one page or 3/4 of a page. Just two maybe small paragraphs based on what you write is more than enough. So GDP, if you want, you can call this Y as well, right? So national income, Y. Okay. Yes, no, fine. Okay. Done. Okay. This question number 4. Now, this is actually a very interesting question. Okay, this is a calculation. Now, remember, now the more calculations like this you do, the more familiar you get. Because remember, these calculations can come in MCQs also. There is no rule saying now you can be with the thought saying, I'm not going to write national income accounting, mate kamarui, right? I'm going to leave that thing. I will study the other units and go. Yes, but trust me, calculations, whether now the same part 2 calculation, they can give it in part 1, right? They will not ask you all of this. They can ask you, let's say, 1 or 2 of this. So remember, even in part 2, it's good for you to do the calculations. So it will give you more practice to do a part 1 calculation. So if you can do the part 2 calculations, that means the part 1 calculations are easy, because part 2 they have detailed calculations. Okay. Then if you look at this, you are given the information about the economy, national income 5.2, disposable income, this has to be YD, guys, right? 4,400. Consumption, is it YD in your book or is it just Y in your past paper book? Is it just my past paper book? YD, right? So make that YD, right? Consumption 4,100. Budget deficit 150. Deficit in trade balance 110. They're asking you, what is the value of government purchases? Now, how do you get to government purchases from this? Now, you need to have a method. If that does not click you can't do it, right? So one thing to get, from the budget deficit, you can get government purchases. You know that. How do you calculate government budget balance, right? So government budget balance is, right? So the budget balance is equal to your taxes minus your government spending, right? Taxes minus government spending. So budget balance they are saying is a deficit, right? That means that it's a minus 100 is equal to your taxes minus government spending. So now if you know the taxes, you can find what government spending is. Now they have not given you taxes also. Have they given taxes anywhere? How can we find the value of tax? So if we can find the value of tax, then we can easily find the value of G. How do you find the value of taxes? What can we do? Exactly. YD and Y. Remember disposable income and national income, the difference. Y D equals Y minus T. Remember that equation? From your income, if you minus your taxes, you get disposable income. So they have said disposable income in this question 4,400. Why they have said is 5,200. So can't you find taxes now? Can you find and tell me how much is taxes in this question? Do we get 800 or do we get something else? Yeah. So take the t into this side, take the 4,400 into that side. So you get t equals how much? 800. So now you put that into this equation, right? So you put that into this. So minus 150, that because it's a budget deficit. If it was a surplus, I would have put a plus value, right? Since it's a deficit, I'm putting a minus value. So deficit, tax is 800 minus the government spending. I don't know. So I need to find. So G is equal to 800 plus 150. That is equal to how much? 950. Simple as that. But this has to click you. If it doesn't click you, you will not get this sum right. Now that will come with practice. Now the first time you do this, no, this is not a sixth chapter. You can even do this with the fifth chapter, right? This question number 4. No, this is fifth chapter, not really sixth. Okay, so expenditure approach. Okay, so how do you find that? From this way. Is that okay? Yes, no. So it has to click you, right? When they say government spending, you need to know, okay, I can get it through the budget deficit. So then taxes, I can get it from YD and Y. That has to come to your mind. If that does not come to your mind, no matter what you do, you can't do this question, right? You will think 100 to 1 times, you can't. So that is why doing papers and doing sums is important. Okay, right? Then how do you take savings? How do you get savings? What is savings, guys? Savings is simple. Savings is simply your disposable income. What is the amount of income you're earning minus your consumption, guys? That is savings. You simply need to know equations for this, right? So what is savings? Savings equals, right, your disposable income. What is the money that you're getting minus your consumption? So can you tell me what are the values that they have given here? Why did they have given 4,400? C is how much? C is 4,100, private consumption, right? So you get savings of 300. So you know if you know the equation, it's a very, very simple calculation, guys, right? So please start studying, right? Revision class students, if you have forgotten, for God's sake, all the recordings are there in the Google Classroom, not the website, no, yeah, in the Google Classroom, right? Your tutor is there, the recording is there, just like you're sitting live for the class. Please go and take some time and watch. I think National Income Accounting, you have around 8 hours of lectures, 2 hours of each. So if you have completely forgotten, that's a very good way to, take some time off per day, watch one video. You can fast forward and watch if you know that area, right? So I've created that platform for you all with all the recordings. And this is something we did months ago. So until you are doing A levels, I'm keeping it. So make use of it if you have forgotten, okay, without completely giving it up. Investment is equal to savings. Not really. So investment is equal to savings when the economy is in equilibrium, right? Because here they're not talking about equilibrium. No, they're not saying that this economy is in equilibrium. So I agree, right? Investment savings in a simple economy, it's equal, right? So that is equal when the economy is in equilibrium. But here they are nowhere they have told that the economy is really in equilibrium. So you can't really talk about that investment and savings are equal here. So there is a problem. Got it? That is why you can't say since investment is how much, sorry, savings is 300, investment also is 300, you can't say that. Okay. How to take what? Recordings and stuff, guys, you can get from our website. So you can go to our website and purchase. So any unit, I think it's there. I can't remember. I don't handle the website really. You can go to iTutorSL.lk, right? That is, if your per unit is around sl.lk, LK, sorry. And you can go to the website, right? Select whatever unit that you want, and you can get the recording and the tute. So you get the recording, the tutes will be printed and couriered within a week. Okay. So that from the GDP equation, can't we find investment? Exactly. We can find investment that way, right? So now last one, investment. How do you find investment now? So here, when we to find investment, right, you can simply go with your GDP equation, right? GDP is equal to what? C plus I plus G plus net export. They have said GDP is equal to how much? They have said 5,200, right? Yeah, you can purchase only the recording, but it'll come with the tute. There is no separate price. Recording and the tute together. Yeah. So GDP 5,200. Consumption they are saying is how much? 4,100. Investment you have to find. Government spending you found in a previous answer, 950. Net exports they've given to you is how much? Minus 110. Got it? So now what you do, you simply move around and calculate I. I'm not going to teach you all maths here. And you'll tell me how much is I. So 5,200 minus 4,100 minus 950 plus 110. Okay. So most going with the majority of answers, majority of you are saying it's 260. So I equals, yeah, I've got 360, I've got 460. Just check with your answers. And I'm going with the majority. Okay. So investment should be equal to 260. Now trust me, this question, if you have practice, it's a very easy question. If it's the first time you're doing, then there is a problem. Then 4 marks will be saying, or you should I do all of this to get 4 marks? But if you know how to do this, if you know the thing, right, then trust me, getting this 4 marks is the easiest thing ever. Okay, you don't have to even write and write. Yeah, so that is that. Are we okay there? So this is a separate question. Okay, that's a separate question. Okay, final one. What is the underground economy? How its size might be reduced? Why have we used budget deficit instead of taking deficit in trade balance to calculate tax? So trade balance deficit is this, no, it's X minus M, no. Now the trade deficit of trade balance means it's your exports minus your imports. So your imports are higher, that's why you have deficit. But to calculate, our focus here was to calculate government spending. No? So government spending is not a part of trade balance. No? It's a part of the budget deficit. That is why I taken budget deficit and not taken trade balance. This is simply X minus M. This is G minus T minus G. Okay. Okay. So then, okay, underground economy and how its size might be reduced. Because underground economy, another word is the hidden economy, right? So what is this hidden economy and how can you reduce the size of this? I'll just share my tute. I'm too lazy to type, right? Hidden economy. Where was this hidden economy in my tute? Okay, yeah. Okay. So hidden economy, paper class recordings are available for purchase? Not really. But if you're a part of the revision class, you get the paper class recording. I'm not very sure who exactly you are from your name, but just check if you're a part of the revision class, drop me a text. I will add you to the Google Classroom of this. All these paper class recordings are available. So even if you all join the fast track in the future, same thing will be applicable. You can get all the class recordings. I don't really want to sell it because at the end of the day, I promise that I will do this for free, right? So I don't want to sell these recordings and make money out of it because that was my promise. Until we do papers, I'll do it for free, right? So if I want to sell it, I can sell that for so much because there's around 17 to 17 right now, around 15 recordings, I think, for now. Then totally there'll be around 30 recordings from 2011 to 2020. Trust me, it will be actually worth it for someone trying to get things done at the end, but I don't want to. Okay. Uh, so what is this underground economic activities or this thing, guys? It's a non-observed economy. So okay, what was the question? Forgot the question. What is underground economy? How its size might be reduced? Okay, so underground economy in simple terms, right, means the unobserved economy, the economic activities that happen that are not observed or that are not seen by the government so that they can include in GDP. So there are two types, right, under this underground economy or the non-observed economy. Number one is the hidden economic activities. Now there are some what hidden economic activities that are not included, sorry, that are hidden, right? Why are they hidden? Now these hidden economic activities, they are legal economic activities, right, but are not captured in formal statistical inquiry. So sometimes some people, they don't show their what whatever economic activity, because why? To avoid the tax payment, right? Then to avoid social security contribution, if they register and do all of that, they have to pay EPF, ETFs, those kind of social security contribution has to be paid, right? So to avoid that, they don't show their true values, right? To avoid having to meet certain legal standards. So there can be different legal standards, like you say minimum wages, maximum work hours, right? These reasons can be there. So because of these reasons, right, some people hide their economic activities, right? They don't really show the true picture. So then the that goes under the hidden economic activity or the non-observed economy, right? Another part of this hidden economic activity are the illegal economic activities. Now whenever you are doing something illegal, those you don't go and report, no guys, right? You don't go and report those illegal economic activities, right? Now, for example, even illegal economic activities, there are two forms. One is the production and distribution of goods and services forbidden by law. The good itself is forbidden, right? Alcohol, drugs, prostitution, transport, things like that. Then there are some legal goods, right? But in order to supply those goods, you need a license, kind of, right? Now, for example, this thing, let's say for you to have your own medical dispensary, let's say a small medical dispensary, for you to have, right, for you to have a small medical dispensary, and let's say but give medicine, that is not illegal, that is legal, you're doing a legal service. But it will be illegal if you don't have the license to do that, if you don't have that medical license. So those are the two types of illegal activities. So these all come under this non-observed economy. Sorry, give me a second. Okay, so underground economy or unobserved economy is that. How can you reduce its size? What can you do to reduce the size? What do you all think you can do to reduce the size of this? Why are people hiding? You find the reason for that. So people are hiding this, one, maybe to avoid the payment of tax. So one thing you can do is you can reduce the tax rate. You can give a small amount. So then people will come and this thing, right? So you can make the tax system more equitable. Now, for example, you can say, okay, if you are a small business, right? If you're earning low income, no, you don't have to pay. But big businesses, maybe you have to pay. And also you can scare these people. You can say, okay, if you don't kind of, let's say, reveal your data, let's say meet the certain standards or reveal your data, then we will put huge penalties. So you can scare them and you can make them reveal those data. That is another way, right? So those kind of things you can do in order to reduce its size. Is that part clear? Okay, how many hours it takes to watch the 2 and 3 chapters? Exactly, charging fine. Chapter 2 and 3 recordings, I'm not very sure. Anyone who was there in my revision class, can you all tell me how many recordings were there? Chapter 2 and 3, I think it was 4 sessions each, if I'm not mistaken. So one unit is around 8 to 10 hours, rough number. So chapter 2 will be around 8 to 10 hours. Chapter 3 will also be 10 hours. So it will be recordings of 2 hours each. It's all class recordings, 2 hour, 2 hour, 2 hour. Ideally, no, you can't really download and watch. You can watch online. So it's not big also. File sizes are around 200 MB, right? So downloads have been restricted because of the sharing issue. There were issues with people. Now I made that platform for students to kind of go back and catch up if they missed. And what happened was there were complaints that some other people are selling my recordings to someone else. They're kind of getting it from me and they're selling it to the other people. Not ethical, no, guys. So that is why I have restricted the download, and then we move to a website. So every account can be tracked. We can see from where you all, not not exactly where your IP location can be seen, from where you're accessing and what are the devices you're using. So whenever our recordings are being accessed from, let's say, 3-4 different locations and let's say different devices, that means there is sharing. So then those accounts get blocked. Apart from that, so only a few accounts have got blocked so far, around 2 or 3. Now, 2 locations, if it's the same device, fine. Can say that maybe you took your phone to somewhere else and when you went to your relation's place, you watched. That is fine. But 2 locations and 2 different devices, then there is kind of an issue, right? So some accounts were blocked, but yeah, you can't download. You can only watch online, any recording. Okay. Is that part fine? Underground economy, yes. And how its size might be reduced? Fine. Yes, no. It's an easy question, guys, actually, underground economy. Trust me. If you know your theory, if you know your basics, it's a very easy question. Okay. Done. Okay, done. Okay, 2014. Okay, question on the fast track. Fast track, I will ideally start in April, right? So the fast track will be a 6-month program to cover the entire syllabus once again. But I'll tell you all this, right? The fast track I'm doing for students who has some idea about the syllabus units, right? So, okay, I'll show you. I remember, I think I made a small plan for the fast track. Okay, so fast track will start in April. So all the revision class students will kind of uh, join, right? So this is the kind of plan, right? So fast track will go for 6 months. I showed this to my revision class students, right? It will go for 6 months. That is April, May, June, July, August, and September. Given that I'm hoping that your exam will happen in October. So how it will happen is in the fast track, right? So you will get one book every month, right? You will get one book every month. So in April, right, we have 4 weeks, 2 classes a week, 3 hours a day. Day one, we go through unit one. So in 3 hours, we will go through the entire unit. So this is not, I will not teach it for someone learning the first time. Someone learning the first time, unit number one, I will recommend you to get maybe purchase of the theory class recordings or revision class recordings. And what's that? Because within 3 hours, for me to finish the unit, I will expect you to know the unit. I will only brush up on the hard areas and tough areas. Then day two, we will do a paper, a 100-mark paper on unit number one, and we'll discuss that. So week one, unit number one is over. Week two, we do unit number two. Same thing, go through it, then paper discussion. Week three, same thing, right? Week four, what happens is we do a mock exam. Now we do a A-level standard paper with 50 MCQs, 10 essay questions, but just these 3 units only, right? These 3 units only. So month two, again goes that way. Unit 4, 5, 6, right? 4, 5, 6. You do a mock exam from 4 to 6. Month 3, you do 7, 8, 9. Remember now this unit 7 in 3 hours, right? So you need to have an understanding. I will not recommend this program for someone learning the unit for the first time. And I will not expect anyone to be learning the unit for the first time with just 2 months or 3 months to go for A levels in June 2021 when you're doing exams in, I don't know, maybe October 2021. Learning the unit first time in June 21, that means there's a problem. You've been idling for 2.5 years. Okay, so it's not really for those. For those people, you can purchase theory class recording little by little catch up. It will not be easy for you to catch up this. So I'll make that platform and give if you all want to, right? June, July will go on. So by July, all the 12 units will be over. And then what would happen in August and September is in August, we'll do complete A-level standard mock exams, hard papers, right? So complete paper, we'll discuss paper one, discuss paper two. Complete paper, right? We do 8 papers like that. So in total, we'll be doing 12 papers and we'll be doing that. The recording only we don't really give. So if you be a part of the fee will be 3,000 a month. That is how it was priced last time also, and this time also it will be the same amount. 3,000 because it's 8 classes, right? No, it's not a must to join all 6 months. But if you all are interested, because you all asked, I let you all know. So if you join, right, you get the recording also. So the recording will be there until you do A levels. As long as you don't share the recordings with anyone, right, through our website, you can access the recording. Now, let's say, now actually there are a lot of students who I've not, yes, fast track recordings will be there, right? So there are a lot of, let's say this thing, it will start in April, first week of April. I've not finalized the dates. I will kind of finalize the dates and let you all know, right? So before we, maybe before April starts, I might have like a free seminar to help you all plan the next few months ahead. In that, maybe if you want, I'll tell you a bit about the fast track also, right? Okay, too many other questions. Guys, revision class recordings also we'll talk later, right? So this is just about the fast track that would happen. So recordings will be there. So even if another class clashes with that time, I've not finalized the time, even if it clashes within that week, so you can watch the recording over again and you can do it. So even last year, it was the same story. I had around 100 students in the fast track. Only around 30 or come to class. So the other 70, right, they fully watch the recordings only and catch up. So today I do, if they can't come at that time, maybe tonight or tomorrow, they watch the recording, they will catch it up and they will do the things that I asked them to do, right? So that is that. But revision class students, this will definitely be worth it, given that you all have now studied all 12 units. Trust me, this is going to be a thing that would definitely be properly do it. It would guarantee your, because you all are not students who are blank in the unit. You all are students who have some idea of each unit. So definitely we will do the tough, now we'll not be doing baby questions here, right? The easy ones will be the tough questions from each unit, right? After doing this, 12 mock exams, 12 unit papers, I don't think there's anything else that the examiner can ask, right? So if you properly follow, it will be really beneficial there. Others, guys, if you're okay on track with the units, join. But if you're completely blank, my recommendation is no point. If you're completely blank, the recommendation is to either go with the theory class recordings or revision class recordings, buy something of that and go, because in 3 hours, I will complete a unit. It will be too hard for you if you are completely blank and learning it the first time. Revision class recordings and tips. Can you drop me a text on WhatsApp after this class? I'll tell you what to do. Okay. Right. 2014. 2014. This is actually an easy question. Is that it? Okay, it's an entire calculation. Yeah, fast track will be 3,000 a month because of 8 classes. Revision class is 1,008 a month. Fast track 3,000, because that even now for your, even to print your material and courier it takes more than $1,000. Printing itself, I remember the people quoted to print. It's a book, right? It's a book of, let's say, around 150 pages, right? Even printing that book, because I'm not printing big quantities, no, maximum, let's say 100, 120. That's what I'm printing. If I'm printing 1,000, 2,000, they would have given me at a lower price. But even printing is taking around 950 or something. So couriering takes around 250 and stuff. So that is why it's priced at 300. And given that it's 8 classes, and but last time also we charged 3,000 with, even without printing and sending the tubes. Last time we didn't even print because it was the start of the pandemic, no, so we couldn't print and courier or do anything. It was just a PDF. Even then there was, so it is worth it. Trust me, it's worth the price. And also, if you all have that, I always have my policy: you pay and join. If you think it was not worth it, right, I will give you the refund at the end of the month. That is always there with me, because I don't want to waste anyone's money. But yeah, okay. Right. 2014 question 5. Now 2014, remember? Friends, just drop me a text of anything else. We'll talk about that later. Okay. Right. Okay. 2014 question 5. Information pertaining to hypothetical economy for a particular year is given below. They have given private consumption, government spending, uh, imports, domestic private investment, factor income from abroad, change in inventories, depreciation, export, factor payments to abroad, purchasing of raw material, purchasing of shares and bonds. Construct aggregate demand equation. Now, when they're talking about the aggregate demand equation here, guys, they're talking about the main, this connects with unit number 6 also, but we'll still do it. How do you construct this? How do you construct this, whatever so-called aggregate demand equation that they're talking about? AD is equal to, AD is equal to what and what and what? So aggregate demand equation or your expenditure, right? Aggregate demand, remember it's simply this, right? So first part A, what you have to write is, you say aggregate demand is equal to C plus I plus G plus net exports. You can say that, right? So if you give this, you will get your aggregate demand. Okay, so that's all that you have to do. If you want, you can go a bit in detail here and say, so instead of I, you can say domestic private investment, change in inventory, depreciation. All of this come under that now. So if you do that, it's more than enough. You don't even have to calculate a value here. They're simply asking you for the equation, right? So you don't have to kind of, let's say, put in numbers. So don't say C plus I plus D, just write the big form, right? So say consumption, right? Since it's a 3-mark question, not 1 mark, no. Say consumption, say investment, government purchases, and net exports. And then you can, if you want, you can write the short form also. So first write the big form since it's a 3-mark question. If it was a 1-mark question, simply writing that is enough. But since it's a 3-mark question, write the big form, right? So say government purchases. You also are writing it in short form, but you all write it in big form, right? And then here say net exports. And then below that, if you want, you can write it in those letters. So you can say AD equals C plus I plus G plus NX. Only the equation is enough, guys, because they're only asking you for the equation here. They're not asking you for numbers. So construct aggregate demand equation. So if they ask you for aggregate, find the value of aggregate demand, then yes, you need to put numbers and find. But they're simply asking you the equation. So this part is enough. Just check your answer scheme if I'm not mistaken. I can't remember exactly, but the depreciation is a component of inside investment. So inside investment, you will have domestic private investment, you will have change in inventories, and you will have wait, private investment. Change in inventories is already inside private investment. Yeah, you don't have to take change in inventories, but yeah, depreciation you have to take. Okay. Okay, that done. Then shall we go into the second part? GDE, easy one now. Part B. GDE, how do we get GDE? GDE is equal to, now you all told me what GDE was earlier also, C plus I plus G, right? So consumption, how much have they given? Look at the diagram, not diagram, this thing. How much have they given? They have said 800. Okay. Investment, remember, you ideally have to take private investment. Remember, inside domestic private investment, what change in inventory is also already there. So you don't really have to add change in inventory again, right? So, but remember, in your paper, they will not call it private investment. They might, let's say, call it gross investment, right? Or let's say net investment, net private investment. Okay. So the terms in the new paper will be a little different, but the methods are the kind of the same. So you can go with that private investment 200 plus. But here again, they are not clear. I'm not very sure if they would have given marks if you didn't take depreciation also. But yeah, I did take depreciation, right? Make it gross. And then government spending. How much is government spending, guys? 150. Okay, 150. So how much do we get? You add all of that, 1150. No, 240, 1190. 1190. Yeah, okay. So if you didn't take depreciation, you will get 1150. I'm not very sure if they gave marks for that, but ideally they should give marks for that because it's not clear. No, they're saying here, they're simply saying domestic private investment. So if it was gross domestic private investment, then depreciation is inside it. If you are taking net domestic private investment, then you have to separately add depreciation also. Since they have been silent whether it's gross or net, I think they would have given marks for both of it, right? Whether you take the 40 or whether you don't take the 40, they would have ideally given you marks. I'm not sure, but yeah, I think. Are we okay with that shape? Or do we have questions? Change in inventory is not taken because change in inventory is already inside this 200. So when you say gross this thing. When they say gross private investment, change in inventory is already inside that. Yeah, it can be 1,150 also if you don't take this 40. So I think both answers should be correct. Can you just check the past paper book? Do they have only one answer or do they have like two? So you can take 1,150 also, given that do they have two answers? Okay, so then correct me. So one way is you take this 40, assuming this 40 is not inside the 200, right? Because they are not clear whether it's gross private investment or net private investment. They simply said private investment, right? So otherwise you can take it this way, right? So 800 plus 200 plus 150. Or you can say instead of the 200, you can get the 40 also. That's why I said both the answers should ideally be correct. Gross domestic capital formation is also gross investment. Yes. So now that's what I said. In the current paper, in the new paper, they will not say this. They will not say domestic private investment. They will say gross domestic capital formation. That is what the word that they would use. Right? No, they will not use that one. Okay. Okay. B part done. Then C. C they're asking for what? C they're asking calculate gross national income. How do you calculate gross national income? Gross national expenditure, GNE. Guys, remember from GDE, you can't go directly to GNE, right? From GDE, I'm telling you, you can't go directly to GNE. So C, right? To get GDE, right now to get, sorry, they're asking GNE, no, gross national expenditure. GNE. To go to gross national expenditure, first of all, you from gross domestic expenditure, remember you simply minusing depreciation, you can't, right? Because, okay, sorry, not depreciation, simply adding the net primary income will not work. You first have to go to net for GDE, you are at the net exports. Then you go to GDP. For GDP, right? That will give you GDP. To GDP, what do you add? You add net foreign, net primary factor, net foreign factor. So if you add that net factor income from abroad, you will get your answer. So how do we go here? So GDE, we can either take 1,150 or 1,190. So I'll take 1,150, let's say, right? How much is our net exports? There is no net indirect taxes here because this is expenditure approach. Net exports is 20 plus 20. Okay. Okay. Net primary income. Okay. So how is this plus 20 coming? It's your exports minus imports, right? So it's 80 minus 60, right? Net primary income is your primary income received minus primary income paid. How much are we receiving? Net primary income received, check in your question. 40. Okay. Primary income paid, that is 60. Okay. So 40 minus 60, you get minus 20. So this is how you calculate GNE. So remember, from GDE directly to GNE, you can't simply add net factor income. You first have to go to GDP. Then only you can add net primary income. So for GDE, if you add net exports, you go to GDP. Then you add net factor income from abroad, you go to GNE. But now in the new paper, they will not say GNE mainly. They will say GNI. Very likely GNI, not GNE. Okay, what is the final answer? 1,150. Okay, so remember now for this 1,150, you can take 1,190 there also, right? Because the GDE calculation is different. You can take 1,190. So ideally, if they give both marks for this, they should give both marks for this also. Okay, so we'll just go with that. GNI includes net in taxes. GNI does not include net in taxes. This is because of the expenditure approach. So remember, in the expenditure approach, when you're making calculations, you don't take into consideration net indirect taxes. Why? Because taxes are already part of this consumption expenditure. They're already inside this government purchase, imports. It's already inside that. Okay, just go and check whatever duty you're studying, right? The product output approach, income approach, you add net indirect taxes. But in the expenditure approach, you don't add net indirect taxes. And net indirect tax is not there here also, right? You don't add. Why? Because it's already inside this. Okay. Done. Okay, part D. What is part D? Part D, net national expenditure. So how do you get net national expenditure? From gross national expenditure, you simply have to minus net, not net. How do you get net national expenditure? You minus consumption of fixed capital, depreciation. So gross national expenditure minus depreciation. Depreciation will be there in the old papers, but in your new papers, they will say consumption of fixed capital. So if gross national income is 1,150, you minus consumption of fixed capital 40, right? It was 40, right? Depreciation. You get 1,110. Yeah. So the, okay, I'll put this here given that I took 1,150. So if I've taken 1,190, then the answers will be a little different. It will be 40 more. Step, yes, no, guys, this is actually easy calculation for 12 marks. I don't know, you'll not get a calculation as easy as this for 12 marks. You have to be smart enough, right? They will give you unwanted things, right? Now, purchasing of shares, not included. Purchasing of raw materials, intermediate consumption. You don't even put it there, right? So you have to be very smart and you have to know changes in inventory is already inside gross private investment. Because if you add again, that's wrong. So be smart enough and do it. 12 marks. It's an easy 12 marks to score. Okay. Is there any question? Okay, so I think the parts after this is from unit number 6. So in 2014, 2014 was actually very easy paper, right? So since 2013 was very hard, 2014 they made it very easy. So they put more questions from unit 1 and 2, and they put there was no question from I think unit 4, that is production. 5 and 6 they put just one question. 2014, if you go and see the paper structure in the second part is a little different. It's very easy. Yours will be normal. I don't think they will make any change to that. So your paper structure will be very similar to the paper structure of 2019 and 2020. 2020 was average. It was not very hard. It was not very easy also. So your paper also will be normal average. Don't expect an easy paper and go saying Corona they will make papers easy. No, now even O-level papers were not easy, right? They were also proper standard papers. So especially A levels, because that depends on university. Now O levels, even if they make it easy, there is not a big issue with that, right? But A levels, if they make it kind of easy, there is an issue because that affects the university entrance and all of it. So remember, like I said before, in O levels you get a 74, 73. They will somehow try to give you 2 marks, make it a at 75. A levels they will not do that. Even if you get a 74, they will keep it at 74. They will not try to find one more mark and give you a because another reason is part 1 and part 2 are marked by 2 different teachers, so they don't know the total mark. One is that. Another thing they won't give you is because that affects the university entrance of another student. Even that 1 mark, right? You might miss the university and someone else might get it because of that. So therefore, they will not give it. They will only give it if you really did deserve it. So be mindful of this. Okay, that is done. 2016. Okay, do you want a 2-minute break? Okay, so take 2 minutes, have some water, do whatever you all want, and then we'll see. We'll look into this. If you all have any gossip to share, nothing interesting happened. School exams are going, no? Nice to see all of you all studying and a lot of doubts also that I get these days. Tomorrow economics, good luck. Yeah, just do your past papers properly and do your questions and go. I think it will be easy. It will not be that hard. district, how many students are taken to USA? I don't really know the quota that way. But if you look at Z score, you need a Z score of somewhere around 1.74 for Colombo management. Now it's that way. A levels postponed. Wasn't the news fake? No, it's news is real. A levels is postponed. It will not happen in August, but they have not yet said a date so far. So far, the date is not there. How did I study for A levels? Sat and studied. So mainly my way of studying is I can't really like sit and read a tube. I mainly do papers and also I teach. So I teach my friends and stuff like that. So therefore, yeah. Can you put it in the screen? Put what in the screen? Local uni is fun, but now it's all online. The entire year I've been online and like yes, like so depressed kind of now. Like it is actually fun, the friends do all the things that happen is actually fun, but now given it's online, it's very boring. Recording the unit 5 and 6 table class. Can you drop me a text on WhatsApp because I'll tell you what to do there. Is it score to enter the law faculty? Is it score to enter the law faculty? You need around 1.9, I think. Colombo law. Colombo law is actually very good, right? They only take 225 or 250 people. Okay, and also boys, motivation for you is from the 250 people who make to Colombo law. I think around 20 to 30 are guys, right? And other 220 to 230 are girls. So there are very, very little guys. For management, it's kind of not balanced. Still, there's more girls. Management, our faculty, there's 580, 200 boys, 380 girls. Z score is calculated based on this thing. Z score is calculated based on how better you do than the average person. You will learn that in statistics and stuff like that. It's some kind of sick, kind of having this thing. I hope it's not corona and all of it. What can you do after LLs if you're interested in economics? If you're interested in economics, I think a good place to be is a local university. You can do a lot of things in a local university. So I'm also doing economics at a local university. It's tough, but it's good. But there are other places. I think even Royal Institute has a economics degree. It's good. For the other places, I really don't know. But Royal Institute is kind of standardized. Other places, I don't know if they have econ. Right? But yeah. So econ is a nice place to. It's a nice thing to do. But yeah. Total number of students that they take for management. So Colombo, they take around 580 to 600. Colombo management. Japura takes around. Now Japura, you need a higher EZ score than Colombo. But go for what you like, right? Personally, I don't like Japura, even though they say Japura is better. I'm not a fan of Japura. So Japura, they take around 1,000, if I'm not mistaken, for management. So target, guys, have the target of somehow that you would go and then work for that. Because otherwise, if you want to do a private degree, even if you get 3 SS, it's enough. That should not be any, that's not going to do any good. So target for something, we can do that. Professions we can do after doing economics, I also don't know. I'll let you know. After maybe 2-3 years later, we'll see what kind of job I might do. Maybe I might quit teaching and do something. Yeah. Will they check the grammar in economics? Grammar in the sense? No, not really. As long as your English is not that important, but you can't write utter rubbish in whatever paper, even business studies they can't. Right? When you're writing things, you have to make sense. As long as you've made sense and you know your stuff, it's okay, guys. Yeah, but work on your English also, because trust me, if you're doing a degree, right, no matter where, now you all are kind of okay, right, you are doing English medium. So there are students, right, who come do A levels, right, in Sinhala and Tamil mediums, and they come to a local university. No matter what happens in a local university, it's taught in English. You don't have a Sinhala medium, Tamil medium. So whether you did A levels in Sinhala, whether you did A levels in Tamil, that doesn't matter. You have to do it in English. So even in the first semester, you will see fellows failing because they can't understand English, because they can't understand anything that is being taught in the lecture. Nothing is going into their head because they have done entirely in Sinhala and Tamil. So that advantage is there for you all, right? So that is there. What degree am I doing? I'm doing the degree at University of Colombo, the management degree in business economics. Okay, done. Enough gossip, no? Right, 2015. We'll do this question and we'll wrap things off for today. Okay, so 2015, question number 4, part 1, right? What are the 3 approaches in measuring aggregate economic activity of a country? Why do these approaches give the same value? Now, this was the same thing that was tested before also. What are the 3 approaches to calculate national income approach? Exactly. Production approach, income approach, and the expenditure approach, right? So production, income, and expenditure. Why do they give the same value, guys? Because you're looking at the same thing in different angles, right? So that is why it's giving the same value. Remember, I showed you that the product approach and income approach is kind of the same because they're talking about the same thing. So same way, even the expenditure, I will not draw it over here. I'll just explain using the previous diagram itself, right? Remember in 2012, right? Okay, so in 2012 here, right, I explained to you how come the output approach, right, output approach is equal to, where did my, this thing go? Okay, this is, okay. So the output approach here is equal to the income approach I explained. So how does this equal to the expenditure approach? Now to buy this 1,000 rupee worth of output, right, how much will a person spend? Again, he will spend 1,000 rupees, no? So there will be a 1,000 rupee expenditure also. So this is the product approach. Under the product approach, they are saying it's 1,000. Under the expenditure approach, the person to purchase that good also, he will spend 1,000. So even the income approach, again, it's 1,000. So it's the same thing. You're looking at 3 different dimensions here, right? So this is the production approach, right? This is the income approach. This is the expenditure approach. So same thing, 3 different angles. That is why you get the same value. If I want to repeat, right? For example, let's say if 1,000 rupee worth of good was produced, right? That is output approach. To buy that 1,000 rupee worth of good, someone would have spent 1,000 rupee. That is the expenditure approach. To make that 1,000 rupee worth of good, you would have spent rent, wages, interest, profit, right? Which equals 1,000. That is the income approach. So you're looking at the same thing from 3 different aspects. You can even explain that using the circular flow of income, right? Now, wages, rent, dividends is the income approach, right? They're getting 1,000 rupees. That 1,000 rupees they are spending, consumer expenditure. That is the expenditure approach. So in return of that 1,000, they are getting goods and services. That is the output approach. So same thing in 3 different angles you are looking at. Okay, so that is the answer there. So you figure out I'm not going to dictate answers, guys. You're not babies to be dictated and spoon fed. You can go through the answer scheme that is there behind Google stuff, do whatever you want that you figure out. I'm just here to explain things. Okay. Okay, then what are the main sources of national savings in Sri Lanka? This is kind of an uncommon question. National savings, how do we have national savings? A question that you have not seen before. National savings is, how do you get national savings? Can you all tell me the equation? Remember, we calculated domestic savings, national savings. How did we get national savings? Whatever equation, national savings. That was the equation. So it was, remember, it was the private sector saving, national savings was equal to your household savings, whatever household save, right? So household savings is that. You have household savings. Then you have, remember, you have government savings. Okay, so it's a business firm savings, business savings, right? So both of these household savings and business savings together, you can call it private savings. Then you have the government savings, right? You have government savings. What do we call these 3 together? Household savings, business savings, and government savings is called what exactly? This is called domestic savings, right? It's called domestic savings. So for domestic savings to go to national savings, what do we add? From domestic savings to national savings, what else do we add? What else do we have? We have net factor income, right? Net primary income from abroad, right? And what else do we add? We add net secondary income from abroad. So these are the things. So net secondary income are like the transfers, right? You can say net private current transfers also instead of net secondary income. Okay, so that's how you go to national savings. So they're simply asking what are the main sources or where does national savings come from? Now here, rather than saying investment, net exports and stuff, this is a better approach to show it because they're asking sources, no, right? So where does national savings come from? A national savings come from one, the household savings, the businesses savings, the government savings. All of these together we call it domestic savings. So in addition to that, we also the net primary income that we receive from abroad and also the net secondary income that we get from abroad. So sources means yes, kind of components or sources here means where does it come from, right? That is what it means. SEP, yes, no, fine. Can't we mention just all together as domestic savings? All together in the sense you instead of saying these three, you want to simply say domestic savings. Yeah, but don't do that because they're giving 4 marks here. No? Now be smart there, right? Because when they're giving 4 marks, ideally they will give you 4 marks or 4 points. So now when you put domestic savings and just put these two, then that can be a problem. Sometimes there can be a possibility. Now it's not wrong, but there can be a possibility they can give you only 3 marks then because only 3 points here. So be smart enough there to broaden this and right. I'm not saying domestic savings writing is wrong, but you might lose a mark. Okay, done with that. Okay, then in what ways are national income statistics useful? Why do we calculate national income? What are the reasons? Why is it useful, guys? This is basic theory. I'll go through my tute. Anyone remembers tute? Where was this from at the end? Usefulness, importance of national income statistics, right? To measure economic growth, right? To estimate per capita GDP, to reveal structural changes, to compare with other countries, all of this. Just if you simply write a few of these points, right, in your past paper book course, there will be some points. You simply write these points, you'll get your answer. Remember, they are simply asking you why. So when they're asking you why, in what ways, no, sorry, they're asking in what ways. So you don't have to really explain. If you kind of state, it's more than kind of enough. Okay, you write those. Okay, and the final question is a calculation. Can we do the calculation? Yeah. Okay. Suppose you are given the following information of a hypothetical economy, right? There is gross private domestic investment, government purchase. Okay, so when they say gross private domestic investment, is the depreciation inside this or not there? Is it inside or not inside? Inside gross private domestic investment? Do we have depreciation or no? It's inside, right? So remember, when they say gross, that means depreciation is also included. If they're saying net, that means without depreciation. Okay. So gross private, this government purchase, GDP, current account balance, taxes, government transfers, interest payments from government to household. They're saying factor income received, factor payments made, net foreign current transfers. They're asking you net exports. How are you going to get net exports here? What are you going to do to get net exports? Think. Exactly. Guys, to get net exports, you get it from the current account balance. This connects to unit number 10 a little, right? So in unit number 10, we study something called the current account balance, right? So if you look at it, what is the current account balance? In the current account, right, you have the goods and service account, right? Remember I said that is the net exports, the goods and service account balance. Then you have net primary income, right? And you also have net secondary income. That is a current account balance. So they have said current account balance is minus 25, right? Net exports or the goods and service account balance, you have to find. You don't know. Net primary income, can you see? There's a factor income received from abroad is 7. Factor income made to abroad is 12. So 7 minus 12. Net secondary income, that is net foreign current transfers, they're saying is 10. Okay, so you work this, you simply know the equation, you can get the answer. So it's minus 25 is equal to net exports. This is minus 5. This is plus 10. So net exports is equal to how much? Someone? NX is equal to, so minus 25 plus 5 minus 10. 20 or 30? 30? Sorry. Minus 25. Okay, sorry. Yeah. Plus 20 minus 30. Yes, remember you need to put the minus, right? You put plus, it's wrong. So it's minus 30. Now see whether their answer is in millions or billions or whatever that they're given. Millions, right? So you write minus 30 milli. Yeah. That's how you get your net exports. So you have to have, now for that, you need to know a little bit of unit number 10. Unit number 10, current account balance. Okay. Then private consumption expenditure. How are you going to get private consumption expenditure? Now this is easy. This has to click you. How can you get that? Exactly. From the GDP, right? GDP, they have said, is equal to C plus I plus G plus net exports, right? I, G plus net exports. GDP they have given you is 400. Private consumption you have to find. Investment they have said gross domestic private investment 70. Government purchases they are saying 50, right? Net exports they are saying, okay, they're not, they are saying we found that is minus 30, right? So you work it around and can you find consumption and tell me how much do we get? C is equal to minus 120 plus 30, 300 and yeah. So that is how you work that. Okay, easy one. Then now you have private consumption to find disposable gross national income. So that 70 includes depreciation. Will that affect? Yeah, that's fine. No problem. You don't have to do anything there. Okay, disposable GNI. How do you go to disposable GNI? Disposable GNI, disposable gross national income is equal to what? The GDP, right? From the GDP to the GDP, if you add net primary income, you get GNI, right? To GNI, if you add the net secondary income or net current transfers, you get disposable GNI. So GDP they have given as 400. Net primary income is 7 minus 2. Yeah. Sorry, 7 minus 12. Right. And net secondary income they have given as how much? 10. Right. So you work this, you get disposable GNI. So how do you go disposable GNI? Once again, for GDP, you add net primary income, you get GNI. From GNI, how do you go to disposable GNI? You need to add net secondary income or net current transfers. So how much do we get here? 400, 7 minus 12 is minus 5, plus 10 is plus 5, 405. Yeah, so 405 milli. Yeah, that is the answer there. And then finally, they're asking you for government savings. How do you calculate that? Government savings. Okay, to explain this again, guys, you need to remember this one. GDP, right? GDP plus net primary income, you get GNI. To GNI, you add net secondary income, you get disposable GNI. So that's the equation. There is no real explanation as long as you know your equation. So that is the same thing. Instead of writing it this way, I wrote it this way. So for GDP, you add net primary income, you get GNI. For that, you add net secondary income, you get disposable GNI. Okay. If you know your equation, you can get that done. Okay. And then final government savings. Government savings, or in simple terms, guys, government savings means, right, that is the government budget balance. So if they have a budget surplus, that means they are saving. So how do you find government savings? So to find government savings, you look at what is the government's expenditure. So what is, okay, government's taxes minus the government's expenditure. How much is government's taxes? Have they given? Okay, taxes they're given as 100, right? So how much is government's expenditure? Okay, there is transfers also. Sorry. Are there transfers? Okay, government transfers, that is also an expenditure. How much are we getting? Taxes is 100, right? That is the income. What is the government's expenditure? They have government purchases worth 50, and they have transfers worth 25, and they have interest payments worth 15. So their total expenditure is, so minus their expenditure, you have an expenditure of government purchase 50, government transfers to households 25, that is the expenditure, and the interest payment to households, that's also an expenditure 50. So they're earning a total of 100 million from taxes, they are spending 50 for purchases, 25 for transfers like pensions and stuff, and another 15 for interest. So what is the balance they have with them? They have 10 million, right? 25, yeah, 10 million balance. So that is their savings. So whatever excess that they have earning more than their expenditure is called the government savings. So government savings there is 10. That's a good question actually, because I've not seen a question like this with government transfers and stuff like that. Fine. Yes, no. SIP. Yes, this is the budget equation. Exactly. Okay, so then that's it for today. We'll do the other papers we've done until 15. 16, 17, 18, 19, 20, 5 papers are there. We'll try and somehow finish it next class, right? So do the questions and come, guys, please, right? Because otherwise it's going to take time. Study the unit, do the questions and come, right? Because otherwise there is no point. Okay, so there are questions in each things. So do those and come. I'll see you all on next Sunday, hopefully. Yeah, welcome, guys. See you. Bye.